Now let us discuss about market risk. So in case of market risk, actually, we will think about the situation in the market. So how do we define market? Market is somewhere. Market is something where we have demand and supply, right? So the interaction between demand and supply actually creates a price, something like that. So this is called market, and this is the main characteristic of a market, actually. Okay, so the possibility of a loss of the Islamic bank, or possibility of deviation from the expected profit by Islamic bank due to adverse market movement of the various assets held in a portfolio by the Islamic bank. What do we mean by that? Like many other organizations, Islamic Bank also invest in some assets with the intention to sell those assets at a higher price. So that is basically their trading investment. They want to buy at a lower price and sell at a higher price so that they can make some profit. So this is called trading portfolio. Okay, trading portfolio. Portfolio means a collection of asset. For example, an Islamic bank can invest in Sharia compliant stocks. The Islamic bank can also invest in some Islamic bonds or sukuk. The Islamic bank can also invest in some assets like gold or different kind of assets, with the intention that this bank will sell those things at a higher price in future. But we don't know what will happen in the market of gold. We don't know what will happen in the market of the Sharia compliant stock. We don't know what will actually happen in the market of the Islamic bank, Islamic bond. Okay, so if the market becomes adverse, like the Islamic bank has bought, but the demand for that thing has gone down or supply has increased, so in that case, the price will go down. Now, the Islamic bank will have to sell it at a lower price. But what was the expectation? The expectation was to sell it at a higher price. So possibility of such event is called market risk. Possibility of such event is called market risk. So you can understand it can happen related to stock price. It can happen due to the sukuk price, as I have said, commodity price, or foreign exchange value. Sometimes the Islamic bank can also have exposure or investment in foreign currency in different capacity. Okay, and it may also be related to the benchmark interest rate. You know that although Islamic bank do not follow the interest rate, but still they have to compete the conventional bank within the financial system. Okay, so sometimes the market for fund, that can also be a reason why the Islamic bank will have to share less profit or something like that. The profit and loss sharing ratio can be adverse just because of the market situation in the fund money market, or capital market. So any kind of possibility of loss due to this kind of thing in the market, that means mainly demand and supply of different tradable assets like stock, sukuk, commodity, foreign currency, etc., etc. Okay, this is called market risk. So this risk only occurs when the bank holds the asset to resell at some time in the future with the expectation of getting a higher price. Okay,